Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. Today we've got two big things to talk about. Number one, we've got an upgrade from Jefferies to $28. This is a really interesting upgrade. Their logic, I think, is very interesting. So we're going to go deep and try to understand why they upgraded the stock. Now, they still have a hold rating over a buy rating. So they're not saying to buy the stock, even though their previous price target was 24. But they are saying it's worth 28. So they're saying don't buy it, even though it's worth more than what we previously thought. But that's what they got on Palantir. So we're going to talk about that. Number two, Palantir signed a new deal. We got a new contract for the first time in like a month, like a public contract. Basically the last two public contracts we got were space companies, and that was basically a month ago, maybe 3 weeks ago. This contract is in the energy space, and it's a very similar contract to the Trafigura partnership, if you remember that partnership from May of 2022, and I think it highlights the diversity of Palantir and some of the deals that they're getting. So we got a lot to get into. Let's dive into it. All right, so let's get into the upgrade and get deeper into what we've got for Palantir. So Jefferies analyst Brent Thill. If you know Brent, you've known how not friendly he's been to Palantir up in 2022, 2023. Started to change before every earnings, started upgrading the price, even though he never had a buy. Said, hey, you should hold it, but we're still upgrading the price. Same thing happens today, $24 to $28 on the day. Now, here's what he said, and I want to dive deep into his comments because I think there's some juice in there, and then we'll keep moving on from there. So, Palantir is the most expensive name in our coverage with shares trading at 19x 2025's revenue. We find it difficult for the stock to work at that multiple. So they're acknowledging in the first paragraph, hey, Palantir is overvalued. However, Palantir has had back-to-back quarters of solid execution, and we view the company as a rare blended AI applications infrastructure asset with near-term revenue momentum. Priced for perfection, but can continue to trade on the AI enthusiasm. Palantir also has unique ownership structure that could cause the stock to continue trading on AI enthusiasm rather than fundamentals. That last sentence, unique ownership structure, I think he's basically saying, hey, retail really loves this stock, which is why it might be trading on quote-unquote AI enthusiasm. But in general, I think the real juice here is when it says, hey, we view them as a rare blended AI applications infrastructure asset with near-term revenue momentum. So although we think they are overvalued, they're objectively saying, hey, we think the stock is way too expensive. We still believe that it should be trading at a level that is higher than our previous price target from $24 to $28. Now, why was this hilarious to me in the morning when I saw this price target? We talked about it on the market open in the stream, and really what was hilarious to me here was I feel like this is what we've been saying about Palantir. At least I know on my market open since July 5th, right? Really since this run started from Palantir going from 24-ish to 29 at one point. My analysis, I've had a couple of different reasons for why I think this run is happening. Some of it's institutional, some of it's clients understanding the value of an ontology, communicating that to some of the institutional analysts, and then they're telling the other institutions, hey, like the ontology is really what makes AI accessible. That's why Palantir is more valuable than a Snowflake, Datadog, etc. But the other reason I think Palantir has been able to sustain the premium, because first, let me just say, objectively, if you're bullish on the stock, you need to know about the fundamentals of the stock. And fundamentally, the company is priced for perfection. You could argue that the 21% year-over-year growth is just not enough to justify the current multiple that it's getting. However, there is something about Palantir that I have been calling the cool premium, and I think I've talked about it on Daily Palantir as well. What is the cool premium? The cool premium is when a company gets a premium because, in the words of Alex Karp, it's effing cool. And what I mean by that is I think there's a variety of ways we could justify Palantir getting the cool premium. Number one is Alex Karp. He's a leader that can inspire people. He can get people to listen. I think if you've held other stocks in the stock market and you listen to earnings calls and you realize the CEO really doesn't know how to communicate to the investing community, then you're in a company where like you're just not going to see a lot of momentum based on the CEO's words. Karp is different. When he says something, people listen. That's because he's an invigorating speaker. People actually care about what he has to say. So I think Karp and his ability to inspire generates a premium. I think Palantir's focused on Western values generates a premium. There are certain hedge funds that probably love what Palantir is doing in terms of stepping up for the United States of America. In fact, when I was at AIPCon, Northwind, the CEO of Northwind, he said that he only bought Palantir. He was one of the presenters because of their patriotic values. And they have a small company with 85 people in the Midwest. So I think that itself gives you a bit of a premium from certain funds that care about those ideals. AIP boot camps, I think, offers a premium where they show you the product before asking for a dime. Not many software companies, if any, are actually executing that at scale. Palantir has done about 1,300 year to date. And then, since they started in about 500 or 900 year to date is what they announced in the previous press release, or the ontology, which I think also generates a premium that most of the street still doesn't understand. There's just something different about Palantir. So today, Jefferies basically said, hey, we know it's overvalued, but we're increasing the price target because of AI enthusiasm, telling their clients, look, there's something special about this one. We can't understand the valuation, which is fair, I get it, but we do know it's worth more than what it currently is. And I think basically this is what retail has been saying for a while now on Palantir. Palantir stock right here at 27.09. It was at 27.50 in the beginning of the day. Now it's at 27.09. I think most of retail has been communicating, hey, there's something different about Palantir. You can't use price to earnings to look at the multiple and say that it's overvalued. I've been the first one to say, yes, the growth is not consequential enough to justify some of the premium we're getting, but I also am not going to be I would basically say narcissistic enough to say the company's fundamentally overvalued. You got to sell the stock. There's no reason for why the company should be trading at these prices, because if you said that about Tesla, you lost. If you said that about Amazon, you lost. I mean, there's so many companies. Said that about Nvidia, you lost. If it's a generational company with generational leadership, you give it a generational premium and you hope it grows into that valuation. Now, will it grow into the valuation? Time will tell. We will all find out. We will all get rich or poor together if that happens, because eventually if it doesn't happen, the stock's not going to be able to hold up. But if it does happen, because you're betting on sort of the non-fundamentals that are still fundamental. So for example, I went to Palantir's AIP con and I talked to 50 employees. I made a video about that. The culture, that's a non-fundamental probably aspect of the investment thesis, but that to me is a very fundamental aspect of the investment thesis at the same time. You can't quantify culture, but culture does matter. So I think Jefferies is basically realizing, hey, the street's not selling the stock. It's keeping at these elevated 27, 28 levels basically for almost a month now. And maybe that's because we're not seeing something in the numbers that the rest of the world retail is seeing. And as a result, we're raising our price target. So it's pretty ballsy going into earnings and saying, hey, we want to raise the price target. But it seems like they feel that there is a level of duality between AI infrastructure and AI applications, along with boot camps, CARP, et cetera, that's elevating the premium on the stock. And as a result, we now have multiple firms on Wall Street, Argus Research, Dan Ives, Bank of America, Jefferies, with an elevated price target for Palantir. Okay, let's talk about the last thing for today, which is the deal that Palantir got today. So Palantir has signed a partnership with green energy pioneer TES to forge a long-term partnership to drive global decarbonization. So I'll read a little bit from this and then we'll keep going from there. Palantir, leading builder of AI systems for the modern enterprise, and Tree Energy Solutions, TES, a global leader in the production of ENG, electric natural gas derived from green hydrogen. I did not know that was a thing. I learned about that today. Announced a multi-year partnership to leverage Palantir's cutting-edge AI software and TES's mission to drive the green energy transition and accelerate global decarbonization. Foundry and AIP will support TES in supply chain management, simulation, and scenario modeling for investment optimization, site selection, asset management, and carbon emissions tracking, and modeling the energy transformation pipeline. So as you can see right there, that sentence shows you the variety of different use cases that TES is getting from Foundry and AIP, and that's probably why they signed a multi-year partnership, because if they're seeing more than 5 use cases, they're realizing that software is probably transformational for the enterprise, and so that's how they ended up getting this deal. I will be curious if this is a deal that they got from a boot camp, or if this is a deal that came from another place, but it does seem like they looked at a lot of these modules with AIP, and that's why they ended up signing this deal. Some quotes from the PR from leadership at Palantir. Palantir prides itself in helping the world's most forward-thinking organizations of all types solve their most difficult problems. Working with a green energy player as innovative as TES was the perfect fit, and we are honored to supply them with an enterprise AI system in support of their mission. Co-founder of TES says this collaboration with Palantir underscores TES's commitment to innovation, demonstrating how AI can accelerate the energy transition. By leveraging Palantir's AI expertise, we will optimize and track carbon emissions, precisely reinforcing TES as an innovative leader in the global green energy landscape. So a couple things here that I think are really interesting from the partnership. Number one is this partnership is very similar to the Trafigura partnership. Some people might remember that. Some people might not remember that. But that partnership was in May of 2022. This is a partnership I always refer to, that when the stock was like $8 and like we really weren't seeing any momentum, this partnership came out, and I was just so intrigued by this partnership because I was like, this is a very interesting partnership, and they're working in a really interesting way, and it just made the company more important to me. I'm talking about Palantir, even if the stock wasn't doing as well. So right here, Palantir, Trafigura aimed to track carbon emissions for the oil metal industry. Essentially, the point of this partnership was to be able to track the carbon emissions within raw commodities via the supply chain, and Palantir software was going to be the operating system for Trafigura to actually be able to find those carbon emissions and then reverse engineer the tracking of those emissions to make sure that those emissions aren't as large as they were in the past. So the broader point here is that energy and climate change, which is becoming more of a larger problem, and all companies are trying to optimize their efficiencies in terms of how many emissions they're putting out there, is something that is in Palantir's wheelhouse. And the reason for that is because not only is energy becoming one of the verticals along with space, healthcare, defense, and logistics that Palantir, I think energy is basically a top 5 vertical for them in terms of the deals they're getting. But climate change is a big data problem. If you want to solve climate change, and I've spoken to a geophysicist on this channel a year ago, and given the 20 years of experience that he had with consulting around climate change and around big data problems for energy, his argument was you only solve or make a dent in the broader global issue that is carbon emissions if you're analyzing trillions and trillions of sets of data. And that data needs to be ontologized via something like Foundry in a way that can derive meaningful insights. You cannot derive meaningful insights without ontologizing that data. So his experience was that when he worked for an oil company and he was advising them on how to save costs, quite literally, if they could save 1 or 2 cents on optimizing a certain efficiency within the enterprise, that oil company could save about $30 million a day with all the drilling that they were doing. Now, that's important not only because if an oil company, which obviously is still going to be polluting to the environment, becomes more efficient, that polluting is less likely to be as bad as it was before, right? Because if you're more efficient, you have less waste. And on top of that, the oil company makes more money. And why is that important? Not only is that good for shareholders and profits and the broader economy, but a lot of oil companies like Exxon and Shell, they're finding strategic initiatives to transition from just oil into renewable energy. And to do that, they need to have enough capital being generated from their current business to be able to invest in new ways to diversify how they're thinking of the energy revolution, because all of them know oil's not going to last forever. So I think if we think energy is going to be a massive opportunity for, especially because AI is going to require incredible amounts of energy, more energy than we have today, then you're going to need big data to be able to solve a lot of the efficiencies and operational problems with energy in the growing TAM that is trying to solve carbon emissions. And I think Palantir is a very easy fit there. So I think the reason Palantir got this deal today is likely because of their experience with Trafigura. That's another reason I brought up Trafigura, because they have experience with carbon emission tracking. So whether they got TES from a boot camp or they approached TES in some other way, they were able to show them a massive case study where they worked with one of the leading global commodity tracking companies for supply chain carbon emissions and present it to TES. If TES is looking at that and they're thinking of adopting all these different modules from AIP that they can interact in with their business, I think the pitch is really easy. I think the sell becomes easier. And I think the multi-year partnership, we don't know the exact number on it, but I would imagine it's probably $10 to $15 million of a deal over 3 or 4 years. That becomes something that Palantir can meaningfully secure in a way that allows them to keep growing. TES as well just raised $65 million in the VC markets, I think in their Series B funding round. So they have $65 million of fresh capital. Maybe it's 10 million, maybe 5 million, whatever they gave to Palantir. The point is, Palantir is getting their sticky little fingers inside of that company. If that company continues to grow and they're growing as a result of Palantir and they're saving money because of Palantir, they're only going to keep re-upping their contract with Palantir. So we're not going to see the massive monetization that quickly. But the long-term bet on Palantir is that one day TES is going to be paying them a lot of money because it's going to be unimaginable to not have Palantir in their enterprise. Same thing with the Bavarian State Police. My thesis is that they're only paying 5.4 million euros to Palantir. We talked about that last week. I think one day they'll be paying 10 or 15 million or 20 million because they're going to see how valuable it is to the police department. So this is the long-term argument for Palantir. This is why deals like this are so important, to see the diversity of how Palantir software can be deployed. And ultimately, you just want to see more and more of these deals. And as a result, that should help top-line revenue growth. All right, that's it for me. Thank you, everybody, for listening and watching. DailyPalantir.substack.com. Free email newsletter every single day if you're not subscribed. Let me know your thoughts on the $28 Jefferies price target and the new Palantir deal we got today with TES. Thank you, everybody, for listening and watching. I'll see you in the next one.